Welcome back. Building on our previous discussion of manufacturing accounts, we will be preparing one in this lesson. Here is the format of a manufacturing account. All these items properly put together will give you your cost of production, which is the total cost incurred to produce the goods that are finished during a specific accounting period. It includes direct materials, direct labor, and factory overhead, and it accounts for any changes in work in progress from the beginning to the end of a specific accounting period. It's essentially the sum of everything it takes to turn raw materials into finished goods. Now that we've grasped the concept, let's examine a practical example to shed more light on the process. We will be stepping into Jenny's manufacturing company, so here is the trial balance of Jenny's manufacturing account. Additionally, the closing raw materials is $12,000, the closing work in progress is $18,000, and finally, the closing finished goods is $10,000. Using the information provided, we are required to prepare the manufacturing account for Jenny's manufacturing company as of December 31st, 2023 in a vertical format. All right, everyone, let's prepare Jenny's manufacturing account together. Remember, we're going to break it down into steps to make it easier to understand and follow along. First things first, we need a proper heading for our account. This helps us identify whose account it is and for what period it's being prepared. So for this example, we'll call it Jenny's manufacturing account, as at the year ended 31st December 2023. Our journey begins with the raw materials. Jenny started the year with an opening stock of raw materials valued at $10,000. Throughout the year, she made purchases of raw materials totaling $50,000. However, there were some materials returned, amounting to $2,500. So we subtract that from our purchases to get the total net purchases, which is $47,500. Now, by adding the opening stock to the net purchases, we get the total goods available for production, which is $57,500. But hold on, we need to account for what's left over. Jenny's closing stock of raw materials is valued at $12,000. So by subtracting that from the total goods available for production, we get the total raw materials used for production, which is $45,500. Now let's talk about direct labor. Jenny's direct labor cost for the year amounts to $25,000. Simple enough, right? We add this to our direct material costs to get what we call the prime cost. Since we do not have royalty or other direct expenses, so prime cost equals direct materials plus direct labor, which gives us a total of $7,500. Moving on to indirect costs. These are the overhead costs that aren't directly attributable to the production of goods. In our case, Jenny's indirect costs amount to $22,600. Now let's bring it all together. We add the prime cost and the indirect costs to get the total cost of production, which is $93,100. But wait, we're not done yet. We need to consider the work in progress. We started with an opening work in progress of $15,000 and ended with a closing work in progress of $18,000. By adjusting for these, we finally arrive at the cost of production, which is $90,100. It's important to note that information related to sales will go into the trading profit and loss account, also known as the income statement. The cost of production we just calculated will replace the purchases in the income statement, since this is a manufacturing company and they produce their own goods. Of course, there might be instances where a manufacturing company purchases some goods they sell, but for now, let's focus on Jenny's production process. And there you have it. We've successfully prepared Jenny's manufacturing account. Feel free to leave your questions in the discussion forum. Thank you for tuning in. Bye.